we're always taught is at an early age to put 20% down, and that is a smart target. But it doesn't work for everyone.
Hey, it's Betsy Stubblefield with Weichert Realtors Big Dog Group, back for part 4 of our 4-part series with John Phillips from FirstBank. How you doing today?
I'm doing fantastic. How
Good.
about yourself?
Doing
Glad to be
well.
back. Thanks for having me.
You're welcome.
Yeah.
Thank you for coming. So let's talk today about PMI. You had mentioned it at one of the other podcasts.
PMI.
And it's like, what is that?
It's not evil. A lot of people think it's evil. But PMI can be a really good tool to utilize. The golden rule out there is you need to put 20% down to have PMI eliminated on a conventional loan.
Right.
Well, that's not the truth.
Okay.
Yeah. So someone could put down as little as 5% down and not have PMI. So how we do that? Well, there's a lot of different options. And nothing is free, but we try to make it as free as possible. So you've got lender paid PMI, where I can come in and increase the interest rate, and they can put 5% down, and they have no PMI. In most cases, their overall monthly payment, your overall monthly payment will be lower. Okay, that's an option. If you're going to be living in the home for a short period of time, the math works with doing this option. Okay, because private mortgage insurance, what it is it's insurance that only protects the lender. It doesn't protect you, it just protects the lender in case of foreclosure. And the PMI rates can vary. It depends on FICO score, loan to value, the overall picture and health of the loan. All right. So we got lender paid that we talked about, right? So then you have single pay MI. So single pay MI is you can still put 5% down or 10% or 15% down. You're going to be coming under the 20% threshold. Single pay MI, you do a lump sum up front. Now that lump sum is going to be less than if you did monthly PMI, which most of your viewers are familiar with, right?
Yeah.
So single PMI is going to be less because the lender's getting it up front.
Okay.
That's the way to look at it.
Yeah.
I have some folks that do that if they're selling a home and they just want to keep a lot of their cash, but they just don't want PMI, and they know they're going to live at the home for quite some time. With single pay MI, you're going to get that benefit of the normal market interest rate, but with no PMI. And their monthly payment's going to be very low at that point for what they're getting. There's split PMI. There's even a PMI. Well, I don't want to bring that other PMI up, but
okay.
where the real estate agent can pay.
No.
Yeah.
We're not going to talk about that one.
Okay, all right. Yeah. So, and there's actually another PMI where you can actually finance the PMI. Normally that's 10% down, but you can have the PMI actually financed in the home, and that's a popular option for some of our borrowers. It just depends on the situation.
So PMI really has a lot to do with how much you can put down. Is your down payment?
It is, yes. And, a lot of it depends on, we're always taught is at an early age to put 20% down. And that is a smart target. But, it doesn't work for everyone. We're in the real world.
Right.
And there's times when we don't have that much money to put down, or we need that cash for other ventures. A lot of people like to take that cash and invest it into other things. So we're able to get someone into a home at a very low down payment, and we can get creative with the PMI, whether it's single pay, borrower paid, lender paid, or financed.
Yeah, and so if anybody has a question about that, and they're looking at possibly becoming, a buyer, what do they need to do?
Well, the first thing they need to do is talk to me, and we need to apply for the loan, and I need to gather some information, and then I kind of get a clear picture of things. It's hard for a doctor to tell you what's wrong when they don't have an X-ray. So basically, we're doing an X-ray of the financial situation. We're looking at your credit. We're looking at income, and then let's look at some options. Do you have a down payment? Do you not have a down payment? If you have a down payment, you might not want to spend it, and that's okay. So we can handle that, and then we look at the PMI and do what's best for you, and this way you can sleep well at night knowing you did the right thing, and you feel good about everything.
Yeah.
I think that's important.
Yeah, definitely.
Yeah.
I like to be able to sleep good at night.
Me too.
Yeah.
I sleep I don't sleep as well as I used to, but I guess that's getting old.
Yeah, yeah. I've always had insomnia, so it's just like sometimes I sleep good, sometimes I don't. So.
Well, I can tell you when my team learned how to underwrite a loan, I sleep much better at night.
Yeah.
You know, when I first started in this business 18 years ago, you know, it was always like, well, let me call an underwriter, or let me see what the underwriter says. When you learn how to underwrite a loan yourself, you're going to sleep a lot better.
Oh, definitely.
Yeah. So you know, you look at the loan, you know it'll work, let's move on.
Yeah.
That way loans don't fail. We don't need that.
Yeah, definitely not.
We're all one loan away from failure.
Yes. Yeah, we like everything to close on time.
Yeah.
Or at least close.
There's 3 things that we need to do every day, and that's close on time, close on time,
and close on time.
Right.
Hey, this is Betsy Stubblefield with part 4 of our finance series with my good friend John Phillips, FirstBank. John, how can they get a hold of you if they want to apply for a loan real quick?
Yeah, they can call me, 615-332-5253, or go to my website, johnphillipsloans.com.
All right.
Yeah.
Thank you so much.
Thanks for having me. Appreciate it. Great.
Thank you so much for joining us. We'll see you next time.
Take care.